What's up, you guys? Zoeb here from OneGlanceTrader.com, and in this video I'll be sharing with you a brand new indicator that I'm calling the OGT candle range indicator, and the indicator is absolutely free. Link is inside the description, and all I ask for in return is that you smash that like button and make sure you subscribe and click that bell notification icon so you don't miss any of my future videos. Now, what is the OGT candle range indicator? As the name suggests, what it does, it calculates a user-defined candle range, and it shows you bullish and bearish signals based on how fill the candle range actually is. But where this indicator is different to other potential indicators that kind of do the same thing is that it only develops signals based on the current trend. So for example, if we're in an uptrend and it will only show you bullish signals where the candle range is hit the predefined user level. Now you must be asking the question is, how does it identify when the market is actually trending and to only show bullish or bearish signals? So on my screen at the moment, I've got the MA slope indicator, where the code of that is actually built into the candle range indicator. But if you kind of need both indicators on your screen so you can kind of see it visually of the up signals and the down signals. So I've talked about this indicator before. Again, when you download the candle range indicator, the slope indicator will obviously already also be included as part of the kind of zip file download, so you can have both indicators on your screen. But I'm starting with the slope indicator. It is not my indicator, it's something I found online, and like I said, the code of the indicator is actually built into the OGT candle range indicator. So the way the slope indicator works is, if I just pull up the settings, so you've got your MA period, and then you've got your MA type. And unfortunately, the way that this indicator was built is, for example, 1 equals EMA, and I think 2 equals MA, 3 equals linear weight, whatever it may be. So I've just selected to 1, and I'll show you a little trick in a second for you to work out whether you're on an EMA or MA or whatever it may be. And applied price is, applied to close, to open, and all that things. So if you just press it on 1, keep it on 1, that will then keep that to apply to close, which generally most traders use moving averages for. So, and what it does, it creates this this moving average line over here. And if you highlight over it, you will see there it's got EMA 20. So where I said, and I'll just show you this actually, just so you guys can understand it. So if I change the MA type to 2, and I hover over it, you can see now it's changed to the SMMA, right? So that's there how you can know whether you're using a simple moving average or an exponential moving average. So if I just move that back to 1 over there, and you've got this now. And what this does is, the indicator in the code behind the scenes measures the gradient of the moving average. And so when the moving average is up, you can see that it's green. And I'll just go a bit further across. And when the moving average is pointing down, it's red to signal bearish. And I don't know if you can see it. I might have to zoom in slightly. That's probably not a good example. Yeah, you can probably see it just over here. When the kind of MA is like range bound, and just over here as well, or kind of flat, and there's no increase in gradient at a big enough level, therefore it is blue, meaning that we are kind of inside a neutral market. So what I said is, in the OGT candle range indicator, this mechanics or slope and gradient is built into the actual indicator. So it will only show you bullish signals when the MA gradient is up, i.e. green, and will only show you bearish signals when the MA gradient is sloping down, i.e. red. So, and if it's blue and you have a candle range that fits the criteria, it will not show any signals. and vice versa. If we are sloping down in red and it gives you a bullish candle range, it will not show you a signal. So that's kind of how this kind of indicator works. And what we're looking at, we are looking to identify a trend with bullish momentum bars alongside with other factors like confluence and like round number levels, Ichimoku, whatever it is that you want to apply to charts um, to give you an entry signal to get into the market on a particular trend. So hopefully that's clear. Like I said, if you've got any questions, just put them inside the comments below. So what I'm going to do is I'm now going to apply the candle range indicator to the chart. So there's two parts to this. One part is displaying the signals, and the second part, which I think is really cool, is that there's a little bit of a backtest element as part of this. I'll go into that after I've gone through the first bit around understanding how the indicator kind of works. So just to go through the input settings, so the range, what this basically means is that if you put 20 inside here, which is the default setting, it basically means that you're looking for candles where the range is 80% filled. So if I wanted to only look at candles that had a 90% filled body, I would put 10 inside here. So let's just say we're going with 90% range filled candles. The arrow size, just keep the 2 as personal preference. And here we've got the moving average. Again, I've just selected 20 as default, and let's go with the exponential moving average. Now these three elements are exactly the same as the MA slope indicator. So if you guys remember what we went through, we did 20, which needs to match the MA period here. We wanted to do an exponential, which we know is the number 1, and we want to apply it to the close, which we know is 1 here. So what that's going to do is basically replicate the moving average slope indicator. Like I said, you don't need the indicator on your chart, but if you're first getting to grips with how this indicator works, you might want to have the moving average slope indicator on your chart as well. Next, you got standard alert settings, and then this next bit is about part of the back test, which I'll go into it in a second. So what you can see is what it's done over here is that it has given you bullish signals where the candle range is filled to 90% of the overall bar. And as you can see here, it's only showing you signals or bullish signals when we're green. And a good example of that would be where it's not showing you a signal is this green bar over here. If I can get my crosshair up, this over here, you can clearly see that this bar over here, this bullish momentum bar, is more than 90% filled, but it is not showing you a signal because we are in a potential down slope over here, which in this example is just a pullback, and then we continue on as part of this overall trend. So you can see here that how it gives you some really nice signals, and it works on any time frame. We're just on the hourly chart on the USD JPY. I'm just going down here, and again we've got a nice little upward move here, which gives you 1, 2, 3, 4, 5 potential entry points into this trend. And if you overlay Bollinger Bands, round number levels, Ichimoku, whatever it may be, to kind of get back into this trend or into this trend where that momentum bar can give you an alert or a reason to come to the charts. It's been a very bullish pair. Some really nice big trends here. I'm just trying to find a bearish trend here, which you can see over here. Now we've got some red candles for that. So if you want more signals, you make the fill lower. So let's just say we only wanted 70% of the bar to be filled. We would put 30% inside over here, and you'll see here that you've got a lot more signals. But if you want high quality signals, it's better to go for a larger range filter. So let's say you did 90%, so we go with 10% 10 there, and again, just give you some nice examples of that. Now, if you use the OGT trend dashboard to go with the long-term trend, or even throw in a 200 period moving average, let's do that as well. So for example, these two signals over here were the start of this kind of uptrend, and again, we got into some resistance levels over here, but as soon as this bar kind of breaks through and this bar or this bar breaks upwards through the 200 EMA, that would have been some nice entry signals. Or you could wait for the crossover, you got your little pullback, and then maybe this bar over here or potentially this bar here to kind of ride this wave up. So just by throwing on a 200 period EMA gives you some examples here of how you can not take every single signal. And speaking of taking every piece signal, I want to walk you through this kind of backtest element that I've added into this indicator, which I think is pretty cool. So what this is to show the historic table. You can input a reward to risk or risk to reward in this case. So we've got risk first, reward there, a 1 to 2, a 1 to 2, 1 to 3, or 1 to 1. So let's just select 1 to 1. You can determine how many bars you want to look back. Let's just keep it to 1,000. And what this check first is it checks at the next bar. It will check first, did the stop loss get hit or did the take profit get hit? And it's not as efficient as a strategy backtest as part of MT4, but it gives you kind of a crude method, for more of a better term, in terms of how this kind of works. And the way that this works is that every time it shows a signal, at the open of the next bar, it will open a trade. It will put a stop loss at the low of the bar that gave the signal. And let's just say that the range was, I don't know, 50 pips, and you put a 1 to 1, it'll put the take profit 50 pips above that, and with the spread of 2 pips or whatever you want to put that as, so it'll be 52 pips total. And what it will do that for every single signal, buy and sell signal, over the last thousand bars, and it will calculate how many of those were actually successful. So we've gone for a 1 to 1 over the last 1,000 bars. I recommend checking the stop loss first, spread filter 2, and then you've got some, you can make the table look like different colors and kind of things like that to suit your thing on there. So it now brings up this table, and now it shows over the last 1,000 bars, there were a total of 99 signals that were generated. 71 of them were long, 28 of them were short, and at a 1 to 1 reward to risk, we had 38% that were 1 on the long side, 35% that were 1 on the short side, with a total of 37.37%. And if you increase risk to reward, so let's just say we're risking 1 to reward 2, that percentage in theory should drop. As you can see here, we still had the same amount of signals, but our percentage has dropped to 23.23%. So, and this again works on any time frame, any currency pair, or any pair that's part of your kind of MT4 kind of broker kind of package. And what this does, this allows you to identify pairs and time frames where, let's just say we did do a 1 to 1 reward to risk of somewhere in the region of 50% or greater. Now, I've done a lot of work on this particular thing, and it's very hard to get something on this particular signal to get it 50% or greater. But the whole point is that you wouldn't be taking every signal. So if I go back to this example over here, let's just say you just had an MA200 as your filter as well. You wouldn't take this, you wouldn't take this, you wouldn't take this. So that's 3 signals right there that you wouldn't take, which have been included in this 1,000 bar kind of back test. And let's say you took this, so all these are all winners here. But then you got this one over here. Now, I've not put the MACD on, but I would imagine there's probably some bearish divergence or something like that, where price is making higher highs, MACD's making lower highs, and maybe that's, there's a pivot level here or a round number level, whatever it is, as other things. So you might not take these two signals. So out of these 10 signals, 4 of them I'm not taking, right? So again, this is just giving you an indication. So things where if you didn't do any confluence and you can get something around the 40% mark. If I go to the 4-hour chart and we're up at 30%, if I then move this back to 1-to-1, we're nearly at 50% of taking every single signal. So imagine if you put a 200 period MA on there and you had some other confluence factors going with you, you could easily improve this 47.83% into the 55, into the 60s to make it into a profitable strategy. So again, just because something shows at 1-to-1 below 50% doesn't mean, well, in theory, in paper, it means it's not a profitable strategy, but you wouldn't be taking every single signal. So keep that in mind when you're looking at this strategy, and comment down below. Let me know your thoughts. Let me know of any improvements we can make on this so we can look at version 1.2. Again, download link is down below. Have fun with it. Let me know what your thoughts are, and I shall see you guys in the next video.